Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In this video I'd like to look at the euro. In particular I'm looking at this strong rally that's unfolded this morning on the 5-minute chart of the euro. And it's very nice to look at the euro because we all know that there's all this chaos that's going on in Europe at the moment with the debt crisis in Greece. So it's quite nice to take a look at how MTPredictor views the European currency, this is the euro against the US dollar, and see if there's any way we could have caught this rally here. So to start with, I want to move out to the slightly large degree time frame, because we always look at the large degree time frame for support and resistance zones and then take trades on the shorter 3 and 5 minutes. So if I move out to the larger degree support zone, so I'll just clear my analysis off and go back to when the market was back here, and I want to show you how our decision point tools can project in advance, because they're leading indicators, future support and resistance zones. So let's just place the DP on the chart here. Dead easy. Select decision point tool, click choose swing high or low, click on the prior pivot, and there you can see it's on the chart in advance for you. And you can see it's down here to around the 36.57 level to 36.51. So it starts at 36.57. So let's move forward, and you can see how the euro came down, went into this decision point level, and if I go forward you can see that's where the sharp rally started from. In other words, right at our support target that was actually projected. Remember, this was projected in advance before the market even got there. So knowing that this support level was here in advance, how could we have made use of this with a trade on the shorter term chart? Well, I'll do exactly the same. I'll go back to before the market was there, and in fact we actually had a automatic DP sell signal here on the short side with a red STF, so a standard trade setup was going down into that area anyway. But let's have a look at in particular this low. So again, we can put the decision point target on the or the decision point support level on the chart before the market gets there. So for this, we again click on the decision point tool, we go back to the last major pivot low, which is here, and again here you can see this DP level on the chart at our same 36.57 level, so it's the same area as the 15-minute chart. And let's see what happens when we come down to this level. We see we come down, and then the market here makes a blue buy reversal bar. So this gives us a chance to say, well, actually we've got signs that the market's reversing by giving us a blue buy bar. We're at the support level on our 5-minute chart, which is also the same as our 15-minute chart, therefore we could potentially consider a trade setup. The potential target is the DP off the prior high, which is up here. So let's put the risk reward on. Again, this is dead easy, couple of clicks, 3 clicks, and therefore the risk reward is a potential 6.7R profit at that level. In other words, a 6.7R trade. So the question being is, did you want to take a buy setup here knowing you're at 5-minute support and also knowing you're at 15-minute support? So the answer to that would be yes, particularly when you had a potential profit target of 6.7R. So if you were wrong, you'll be losing what we call one risk unit. If you're right, there's a potential 6.7R profit in this. So let's see how the market unfolded. Well, it came in and actually then rallied up, took you into the trade. We then go forward, the market starts to rally up, rally up. It now reaches our target. So what do we do now? Well, standard trade management guidelines say we come down to the STF and we look at the strength, what we call the strength of the STF, and this is where this oscillator is beyond our strength band, which is this grey line here. And here it is beyond our strength band, therefore it's what we consider strong, and we anticipate the market is going to rally further. So now we start to manage our trade using our ATR stop, which are these little blue dots. So if I go forward, the euro keeps on rallying up. You can see our blue dots are holding us in this long trade. As it goes up, it goes up. And now, at this point here, at the 37.66 level, we get stopped out because that's where the market crosses our ATR stop level. So to put the risk reward on this again, couple of clicks, there, one click at the price level, which is about there, and you can see this trade actually made a 11R profit. In other words, it turned initial risk of approximately $400, which is our 2% on our $20,000 account, and would have made a profit of approximately, well, $4,400. So very, very good trade indeed, but the whole trade was set up by knowing in advance that this level, this 15-minute support level, was on our chart. So this level was on our chart in advance. We then watched the market as it got down to this level. Then we came down to the 3-minute chart and set up our trade entry off that. We then managed on the 3-minute chart using our standard trade management guidelines, and as such we're able to catch this nice strong rally in the euro that's literally just unfolded this morning. Because if I go to real live data, we're already just past this level here. So this is a very good example of how to use the tools in MTPredictor, particularly the decision point tool, as a leading indicator. In other words, it gets you projected levels in advance, in other words before the market gets there, and then our position sizing tool allows you to set up a trade with a potential target, because that's important, so you can assess the potential profit in terms of your initial risk. Again, that's vitally important to know how much potential profit there is in a trade in relation to your initial risk before you take it. Then as the market rallied through this, our STF gave us signs of strength, and that allows us to run our trade a little bit further, and the end result was a very nice trade indeed. So I thought that was a very good example to show this morning, particularly as the euro is a market that many people are concerned about with all the chaos that's going on in and around the Greece debt and other countries in Europe at the moment.